16-4, work together, page 501 in your textbook. We are going to do the closing entries for Superior Corporation, and the adjusted trial balance is here along with all the financial statements that we have prepared. But I am going to use this adjusted trial balance to walk you through. So we're going to close everything ultimately into retained earnings as a reminder. Here is dividends for the fourth entry, income summary, and then we're starting here. So the very first entry that we need to make is related to the credit balances on the income statement. So the credit balances. So starting here, I'm looking and I have sales as a credit balance, purchase discount, purchase returns and allowances, and interest income. They all have credits, so to close them and get rid of them, I need to debit them for those amounts and then add them up and credit income summary. So here is the entry. So I've debited those four accounts: sales, purchase discount, purchase returns and allowances, and an interest income, to get rid of the balances. And I've added all four of those up to get 508,297.32. So that is the first entry. Second entry, I want to get rid of all the income statement accounts that have debit balances. So again, I'm going to look at my adjusted trial balance, get back down there to dividends on down, and I don't do dividends because it's not an income statement account. Income summary is not either. So I'm doing sales discount, sales returns and allowances, purchases, and then all of these expenses, all of them, all the way down through federal income tax expense. So they're all debit balances. I'm going to credit these accounts to get rid of them, which I have done here. Sales discount, all the way down to federal income tax expense. And I put all those balances as a credit to get rid of them, add them all up, and I would get 429,376.63. And I put that in income summary. The next closing entry is to close income summary. And I can do this in one of two ways. I'm going to do the easy way first. I know that I am closing out net income or loss. So if I go to my income statement, the net income after tax was $73,000. So I know I have income, and I know that income is a good thing. And if income is a good thing, it makes retained earnings go up. So I'm going to credit retained earnings and I'm going to debit income summary. So if you go down here, you'll see my third entry. I've credited retained earnings for the amount of the net income, and I've debited income summary for that same amount. If you would prefer, you could actually take the amount that was in income summary. Let me get there. Income summary had a debit of 5771.89, and then a credit of 508,297.32, and then a debit of 429,376.63. So if I add my two debits together and subtract the credit, I would get $73,148.80 as a credit balance, and to get rid of that credit in the income summary, I needed to debit it. So that logically holds together if you want to do it that way instead. And then the fourth and final closing entry is dividends, and we're closing that again to retained earnings. So I know from the adjusted trial balance, dividends were a debit of $12,000, so to get rid of them, I need to credit dividends for $12,000 and put it in retained earnings by debiting. It reduces retained earnings, which makes sense. So that's all four of our closing entries: R, revenue credit balances; E, expenses debit balances; I, the income summary; and D, dividends. Read. Those are my four closing entries. And as soon as I have closed those, every account, and I've posted them, every account from dividends on down are going to have a zero balance. And I have essentially thrown all of those balances into retained earnings.